Welcome back to the Cobra Trading Channel, everyone, where we focus on people, passion, and platforms. I'm Alex Bustos, and today we want to be talking about the key differences that separate the successful day traders from the unsuccessful day traders. Let's get started. Specialization. Successful day traders, they focus on one type of style of trading, whether that's swing trading, day trading, scalping, and they really hone in on what is working for them and focus on it to make it their bread and butter. So that way they know how to trade it in and out in their sleep because they want to be specialists. There's so many ways to trade that we can get lost and try all these different things, which is okay when you're new. But once you figure out what clicks with you and your personality, maybe focus there because the great ones, they specialize. Routine. Your routine is so important because as a trader, you can't really control if you're right or if you're wrong, but you can control your routine and what you do every day to prepare. What you do when you wake up. Do you have a morning routine? Do you get coffee every morning and then sit down and look at all your scanners? Do you look at certain scanners first before others? Do you check out what other people are looking at? What is part of your routine? You need to build a routine so that way you can be consistent. So that also implies that you have a routine in your process of executing a trade too. Do you just jump in and trade? Do you have a routine of how you evaluate that trade? Do you go through SEC filings? Do you go through the float? Do you look at market cap? Do you look at the chart? Do you look at the daily, the weekly? What is your routine? You need to make sure you have that jam-packed so that way you can control what you can control. Risk management. You read any trading book and you see this chapter. It's because it's so important. And risk management, how you calculate risk, how you manage your risk is something you need to sit down and really think about. You need to ask yourself questions like, when am I comfortable losing? How will I judge my risk area? What will determine if I'm wrong? What will determine if I'm right? How will I scale in? Do I scale in? Do I go in one bullet and that's it? That's going to be up to you and your strategy, but you need to figure out how you're going to manage risk, and it could be different depending on the setup. Make sure, going back to routine, that throughout your routine, you can have a risk section where you're like, okay, with this type of trade, I need to risk X. Now, going along with risk management is also knowing when not to trade, because the traders who specialize, it's easier for them to know when not to trade because they know it's not there. So you need to understand, you got to figure out when you should not be pressing that buy button or not pressing that short button. You need to understand that knowing when not to trade is just as important of knowing when you see the great trade to execute. Resourcefulness. You need to understand how to be resourceful. And that just doesn't mean go to certain websites. Sure, that's fine. Go to websites to find the best float, the best market cap, when news is coming out, maybe getting the best software that's going to help you know when news is going to come out. It all depends on your type of trading. But on top of that, you also want to make sure what type of charts work best for you. Is it line charts? Is it candlestick charts? What time frames work best for you and your style? You need to be resourceful and try everything to figure out what works best for you. And a little quick tip, maybe try to analyze when you're not in the middle of a trade, right? Maybe do it when the market's closed so you're clear-headed. That way you can focus on understanding what works best for you. Rules. You need to have a set of rules. Every trader has their own set of rules. Some traders all have a very similar rule, but treat it different. And you're probably like, well, I hear some guys say never short the first green day, never buy when things are dying. But then you'll see another trader who does that. And that's because you need to make rules that protect you from you. So if you have a habit of revenge trading, then make a rule that prevents that. If you have a habit of blowing up accounts, then make a rule that stops you from trading when you hit certain limits. You need to have a set of rules because the traders who make it, the traders who are successful, have rules. Being able to adapt is another key difference between a successful trader and a non-successful trader. The market is a cycle, right? It gets really busy, and then it gets really slow, then it gets really choppy, then all of a sudden everything's running, then everything's dying. but it goes through cycles. And being able to adapt through those cycles is so important. So make sure that you are flexible. Now, I know we just talked about rules, but you sometimes need to be a little flexible with your rules when the market conditions change. So understand that and be patient with yourself on that, because it takes a long time to find success. I know I threw a lot at you, but I need you to really do all of these things. And the only way you can is by focusing. The traders who are successful, they focus and they make sure that they do these things. They make sure that they separate themselves from the unsuccessful traders by focusing on all of these key areas that we just talked about. So make sure that you focus and stay steady on the track. We hope this video was helpful for you. If it was, please make sure to subscribe and hit the bell and share the channel with others. And don't forget, if you have any questions for us here at Cobra Trading, go to our website and we're happy to help. Thanks.